Welcome back, and joining me for a closer look at what's played out on the market scene today is Cremen from AdviceWorx. Thank you so much for your time, Caroline. I must start off with the data that we've seen in the U.S. labor market, because yesterday the job openings for May came out more than expected, so more job openings. And then we had the ADP private payrolls for June coming out today and actually softening, missing expectations. And I'm wondering what this data then signals for the labor market currently in the US.
Yeah, well, the ADP, it is private, so it probably reflects a lot more about what is actually happening in the economy. And it was quite a big miss, so there were 33,000 down and they'd expected 115,000 gain.
Oh.
Not only that, if you read into the figures, wage growth was down, especially in the services industry. This comes ahead of non-farm payrolls, which we'll see tomorrow. But just from this whole ADP thing, it does have a tendency to obviously worry the market because, spending power, people from the private sector, a lot of spending power. And if you're starting to see a stress on services already, where there's not as many job openings, it doesn't look great for the American economy. But like you pointed out, there's there's two stats coming out, and the one says this and the other one says that. So we're in a bit of an uncertain period right now.
Yeah. All right. Well, talking about uncertainty, definitely Bytes having to deal with an uncertain macroeconomic environment. They actually said that they experienced a more challenging macroeconomic environment. Of course, they gave us a business update ahead of their annual general meeting, saying that they expect in the interim period their gross profit to be flat and the operating profit to take a dip. But that share price reaction was absolutely insane. It was down 27%. Was it that bad?
No, it really wasn't. And it was probably the biggest reaction to an AGM statement that I've seen for quite a long time. This wasn't a trading update. This wasn't results.
Yeah.
But it's actually quite interesting from a South African point of view, because this is really one of the knock-ons from the trade wars. Now, we assume that those tariffs have not really been fully implemented yet. But one of the consequences of tariffs is that customers, especially big corporates, just don't make decisions until they have certainty. And, companies like Bytes who, do service a lot of these big corporate customers with these big contracts, which are usually signed in the first half of any year, to be implemented in the remainder of the year, was affected by that. So I don't know if the market didn't expect, that type of impact, and it came as a bit of a shock. But it also came on a day where we've heard from Microsoft, which is one of the products that they do supply to their customers, that Microsoft is cutting an additional 4% of headcount. So I think ahead of the US earnings, which are going to start to come out for, these big consultancy companies and other corporates that have actually that similar type of, similar type of service, should we be worried about the market's reaction? Because after the tariffs, a lot of these things are actually quite highly valued. So a little bit worried about our market reaction. It might actually be a precursor of what happens overseas.
Yeah, I know. I must tell you, I was very, very surprised. And you can actually even see that chart. What a terrible slide down to the bottom. And actually more than I expected. That slide, I think, ending off just under 30%. Well, let's get into more company news. Sun International deciding to cancel its proposed offer for Piedmont. I mean, this deal had been on the cards for a year and a half. Was the road just too bumpy?
Well, I don't know, because it's kind of a bit strange, because obviously they came to the market with the deal, shareholders approved it, Competition Commission, of course, hated it. With good reason. We have quite a concentrated gambling industry. A lot of that is kind of our own fault, is that we issue very few gambling licenses. So there is there's a shortage there that it's kind of self-inflicted. That said, this was referred to the Competition Commission the Competition Tribunal for appeal, and they're only hearing it in October. But, with all these types of corporate actions, there's a set time by which time, these things need to be concluded. And for Piedmont and Sun International, that was September. So then that leaves the question, are they walking away forever? Because remember, this is the second time that they've tried to do this. Or will they try again? Will it be third time lucky? So we'll wait and see.
Well, it's quite interesting also how the market reacted, because that share climbed by about 8%. So I'm guessing maybe that's a signal of investor confidence that they still like Sun International even without Piedmont. Just lastly, before we get to your stock pick, this is not a new thing, but Blue Label renewing their cautionary, saying that they are still in discussions in terms of potential restructuring. I mean, what kind of value could Blue Label unlock here with the strategic review?
Well, I think it's going to be great, for Blue Label, but also for Cell C, because Cell C will come to the market. Unfortunately, had issues over the years, and so has Blue Label. But the way they'll restructure Cell C itself, a lot of the debt, or some of the debt that's actually there, will actually convert to equity, which is actually. It's actually a good thing, because this company has certainly had its issues. And over the recent years, actually recent months or years, it's actually looking a little bit more stable. Some of the figures looking a little bit better. So I think positive for both of the companies, and it probably is a deal that is likely to go through. It doesn't have to go to the competition commission, I think.
All right, well, let's get to your stock pick for today. Caroline, what are you choosing?
Well, I'm thinking JP Morgan. So this is one of the largest banks in the world. It is really always usually in the top 10 in the US for companies for net income. It's up 40% this year. So that's quite amazing, because that's despite the fact of, interest rates possibly declining over the next few months. And that's because it's got a very diversified revenue stream. It is a dividend aristocrat. It has just announced that it's actually increasing dividends, also its share buybacks. Now, in the last few days, what has happened is that it has passed the Fed stress test. Now, a stress test is where the Federal Reserve will, kind of have a model where they actually put recession type of conditions to these banks and see how they cope. And JP Morgan came out of flying colors. Now, that's quite important, because the Trump admin is actively trying to reduce the capital adequacy conditions on some of these better managed low risk banks. And it's one of those policy decisions that is backed by Jerome Powell, the head of the Fed, the head of the Treasury, and Jamie Dimon and other heads of these banks. So there is some consensus. They're in a consultancy period now. But I do think it's likely to pass. If that does pass, that does give these types of banks room to actually pay even more dividends, to make even more, stock buybacks. It increases their ROE, and it might actually give the share price a bump. But even if it doesn't, you are holding on to a very good dividend aristocrat.
Very insightful points that you make there, Caroline. Thank you so much for making us smarter today. Really appreciate it. That was Caroline Cremen from AdviceWorx.